You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
The great story about Michael coming up next is he just started writing, and that's how he found Josh and Barry, or they found him, and now he's living what he says is his dream job, and he's going to talk about all the mistakes he made as a trader and what he's learned from what you just heard from Josh. Okay, come on up, Mike.
Thank you. Okay, so my name is Michael Batnick, and I am the world's premier natural gas futures trader. So I want to thank Howard, Ian, and Justin for having me. So I'm going to talk today about my journey as an investor, all the mistakes I made, and some of the lessons that I've learned. So nothing is going to be particularly actionable today, but hopefully you will find it, the honesty, refreshing in an industry that could use a lot more of it. So when I started trading in about 2010, I didn't know anything. So I started reading books to learn a little bit about what to do, what not to do. So I started with The Intelligent Investor, and this resonated with me. Okay, so buy stuff for less than it's worth. Take advantage of Mr. Market when he gets crazy, and let's get to work. And then I read The Little Book of Common Sense Investing by Jack Bogle, and I found out that Warren Buffett, the ultimate practitioner of value investing, was recommending index funds. So why not take his advice, right? I mean, why even bother trying to beat the market? And then I found Reminiscences of a Stock Operator, and I saw my destiny. So how many in here have read Reminiscences of a Stock Operator? Okay, see, I don't know, let's say 65 to 66% of the hands just went up. So how many of you, two more questions. How many of you have made a trade in the last 30 to 60 days? Okay, majority of the room. How many of you are below average traders? And put your hands way up in the air. All right, so, okay, more than I would have thought. All right, so you're not alone. I'm here today to tell you that we exist, and so let's get right into it. So a lot of people think about stocks as just pieces of paper to sell or buy and give to somebody else, and this is completely wrong. Stocks are actually fractional shares of ownership in a business, and you have to take this seriously, and so I did. And I carefully analyzed 98 businesses, the insides of ConocoPhillips and Alibaba, and Best Buy and General Electric and Intel and Valiant and Priceline, and the list goes on and on and on. So these are 98 businesses that I carefully studied. You'll see no consumer staples because that was just clearly outside my circle of competence. So I failed Buffett's 20-punch card about 5 times over, but the best thing about trading all of these different wonderful businesses is that you don't have to know anything. You can just trade them, and it's a lot of fun. All right, so these are by the way, I didn't just trade individual stocks. I was also dabbling in the ETF market. Everything from junior miners to bonds and small caps and biotech and moo. And I did some overseas exploration. I was trading emerging markets in Japan and India, obviously. And I even went into the basket of deplorables, which the triple inverse biotech stocks, I was extremely successful there, obviously. And I traded some commodities and corn and wheat and the dollar, why not? All right, so by the way, I didn't just own stocks, I also did short them. So this is about the time where the book came out, Why I'm Leaving Goldman Sachs, and I'm gonna tell you today why I shorted Goldman Sachs. So there is me stalking my prey back in 2012. Input some of my proprietary model, and then boom. I shorted on a Friday, and I covered it on Tuesday. Sorry, Mr. Blowing Fine. So I also shorted overvalued stocks. This is Amazon in I think 2012. And I found my notes as I was looking through my trading diary. And I'm going to read what I wrote on that very day. Let's see. God, this is embarrassing. Okay, so these are the notes that I took on, what day is this? I don't know. Sometime, whatever it is, it's 300% ago. I was wrong. All right, I shorted 100 shares at 188.40. News broke that their prime service added fewer than half of analysts' estimates. Losers. The stock had been up 11% year to date, and in my opinion, based on the meltdown that we've seen, Kindle Fire has not been a success, and when they announced a very, very disappointing Q4 results, the stock traded down as low as 172, and the price action recently has acted well due to the rally, which obviously could continue, and Amazon has earned its ridiculous valuation, but its growth finally appears to be slowing. So, yeah, that was a good call. All right, so let's talk about trading from the long side. So this is a really sloppy setup that is right in my wheelhouse. I see JC sweating back there. So this was a few years of Agrium. I think they make dirt, dirt manufacturing company. So I saw that it was going lower. It broke below the 200-day. Screw you, Paul Tudor Jones. So I got long and then I got out. Textbook, really. Oh boy. Well, this is not exact, but let's call it close enough. The last 5 years have been, well, I had fun. I guess you could say I lagged a little bit. All right, this next slide I want it to stay here. Please, let's keep this between us. And I wish that I had a little bit better touch with PowerPoint. But anyway, so I can't read this, so let me just take a step over here. So on the left-hand column is the years going down, cost and proceeds, gain and loss. Yes, I lost money in 2013, but at least I wasn't correlated. So I didn't take any big losses. I never blew up, but I was just having fun. I was basically paper trading with actual money. And so 87% of the dollar volume of trades in 2011 was FAZ. And then I moved on to CF, another dirt company. And then in 2014, Celgene, and then in 2015, Twitter. And what did all of these companies have in common? Well, nothing, obviously. So I recently read Clash of the Cultures, Jack Bogle book, and he said that he estimates, I don't know how true this is, but $33 trillion in commissions a year. 33 trillion, over 200% of the US GDP. And I believe it. And I am proof. I spent $17,000 on commissions. And I didn't even think I was trading a lot. But I walked into a TD Ameritrade branch one day, and this guy gave me a bottle of Dom Perignon, and what did I do? Well, he said, you spent $9,000 on commissions last year, bud. Keep it up. Please, nobody post this on social media. So, it's your lucky day. I am starting a subscription service. Thank you, Howard, for giving me the platform to announce this. For just $1 a day, you could trade alongside me. All right, so I'll just turn serious for half a second. So Howard shared that chart that I posted a few months ago about Amazon being up 39,000%, but humongous drawdowns along the way. And the irony is that I was trying to choose my words a little bit carefully, but the beneficiary of one of these monstrous stocks. So my parents got divorced in 1990, early 1990, something like that, and my mother had to go back to work. She had no money, so my uncle got a stock tip, a little company called Celgene. In 1996, and split adjusted, that was 12.5 cents. Now it's $20 or something. So that stock went up 5,000%, turned my mother's $20,000 into $1 million. And when she passed away, I was trading with obviously way too big of an account, and I could not afford to take any big losses. because I needed the money to pay for a wedding and for a down payment. So I had the shackles on. And I'm not saying that if I had the shackles off, the results would have been any different. But so I was cutting my losses really quickly, which was a good thing. I never took any big losses, but I was also cutting my winners way too quickly as well. Why? I mean, I'm very human, just like the rest of us. So all of these biases, I mean, check, 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 check. I did it all. Why I stopped trading, I'm not going to read all of these. Well, why I stopped is pretty obvious. I mean, how long could you bang your head against the wall before you say, you know what, I respect the market, beating it is really difficult, it's a full-time job, it requires nothing less than 100%. I don't have 100% of my time to devote to the market, I didn't want to. Competition, when Bogle started in 1951, 70% of the volume was done by individuals, and it was basically just buying and selling AT&T, and today it's the exact opposite. Obviously, everybody knows high-frequency trading and hedge funds do it all. So I just want to read you one quick thing about taking your own advice. So obviously, I work with Josh, and we do not advocate that our clients trade. So I wanted to really practice what I preach, and I do now. So mathematics professor Barry Mazur tells a story. Some years ago, I was trying to decide whether or not I should move from Stanford to Harvard. I had bored my friends silly with this endless discussion, and finally, one of them said, "You're one of our leading decision theorists. Maybe you should make a list of costs and benefits and try to roughly calculate your expected utility." And without thinking, I blurted out, "Come on, Sandy, this is serious." So I didn't want to be that guy. I want to have my money invested alongside our clients the same way. I don't mess around. I put money into the market every month, and I want to, if the ship goes down, I want to go down with them. Two quick tweets that I saw recently that I think really do a great job of summing up how I feel. One from Eric, I think the J is silent. I'm going to go with Jorgensen. I don't know who that is, but he wrote a super depressing truth. The market doesn't care how hard you work. So true. Super inspiring corollary, the market doesn't care how hard you work. Also so true. You don't get any points for complexity. And then from Bluegrass Capital yesterday, the power of compounding is so great that our first job as investors is to avoid anything that might short-circuit it. I do not want to short-circuit my compounding any longer. I'm 32 years old, and I hope to be investing for the rest of my life. And whether I get 2% or 6% or 7%, whatever the market's going to give me, that's what I want. I want 100% of the upside. I'm okay with the downside. I just want the upside as well. Lastly, my portfolio, it's basically index funds. The only reason why I don't have the tickers listed is because who gives a shit? It's index funds and some of our clients, so they're overlap, so whatever. 52% US stocks, 45% non-US stocks, 0.5% is in biotech, ETF, short, that's a joke. And so far so good. I'm sure it'll all go to zero one day, but so far so good. And that's it. So thanks, Howard, and thank you, everybody.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.